Alrighty, guys. So we have 7 companies to break down in this video. I think 3 of them reported earnings this morning. So you guessed it. We're going to break down those earnings, a bunch of charts, what I'm looking to do with these stocks, guys. So if y'all find value, hit that like button. Make sure to subscribe and follow me on X at Stocks Talk Stocks. And if you have not gotten your free stocks yet for Moo, what are you waiting for, guys? Use that link down below or go to stocksurfs.com/Moo. Open up your account and deposit at least $100. You get 5 stocks right off the bat, each of which could be valued up to $2,000. And you also get a free share of SoFi stock on top of those 5 stocks, again, with just a $100 deposit. So use that link down below. Get your stocks, guys. We'll talk more about that later. And with that being said, cheers. Let's dive into it. So the first stock I want to break down in this video today, guys, is none other than Walmart, ticker symbol WMT, which this stock, I'm not sure if you guys saw it, but it went down over 8% on the day after we got earnings from the company this morning. So let me actually pull up the live news tab very quickly. We'll break down the earnings. Then we'll take a look here at the charts and see what's going on. So Walmart ended up reporting $1.53 in adjusted EPS, which slightly beat the $1.52 expected. And sales also beat $160.8 billion versus $159.55 billion expected. So they beat EPS on an adjusted basis, and they beat on revenue. Let me see here, guys. I believe they guided up on revenue as well for the full year, although I'm not seeing it here. Yeah, it looks like now they see full year sales up 5 to 5.5%, and now they see full year adjusted EPS at $6.40 to $6.48 compared to that $6.50 estimate from the analyst. So a little bit under there on the EPS guidance, but I think the sales guidance was pretty good there, guiding for 5 to 5.5% sales growth year over year. Not too bad. And looking at the charts here, guys, we can see we are collapsing, that's for sure, on the intraday chart, but here on the 4-hour chart, you guys can see here on the intraday chart, we're collapsing, but here on the 4-hour chart, we're arguably still holding an uptrend, right? Do you guys see this right here? Let me draw it out so you all can see it. We have a higher low right there, trying to hold, potentially holding, at least as of now. And we have all these other ones made over the last couple of months. So technically, I know we're collapsing, but at the same time, if we do start to get some consolidation here, buyers coming in, maybe Walmart could recover from this point. And from what I was reading in the earnings report, guys, they're actually seeing deflation in certain categories when it comes to groceries. I think in eggs, I believe, what was it? Seafood, some chicken. I think chicken seeing deflation, and one other category, but I'm forgetting now off the top of my head. But they're finally starting to see deflation, and this has been a thing over the past couple of months at least. But of course, a lot of other products, guys, are still experiencing inflation. But a couple of the grocery categories, again, chicken, I think eggs, seafood, one other one that I'm forgetting, they're seeing deflation, which is good for the consumer, but at the end of the day, not the best sign overall for the business. So Walmart, that's what they ended up reporting in a nutshell. That's how their stock is looking right now. Let's see if we do get some buyers at about 155, 160. We'll see what happens there. Time will tell. And Cisco also reported numbers after the bell, or was it this morning? Either way, they reported earnings today, and their stock went down 10% on the day. Unbelievable. And actually, it looks like their numbers came out, wait a second, yesterday? I must have missed that. So their numbers came out yesterday. All right, my mistake, guys. My bad on that. But it looks like, 10% red day today after numbers came out. And it looks like they ended up doing, where is it here, guys? I'm almost there. Let's see here. Adjusted EPS of $1.11, which beat the $1.03 expected. And they also beat on revenue, $14.67 billion versus $14.62 billion expected. And it looks like here, revenue guidance, they see 2024 revenue guidance of $53.8 billion to $55 billion, below the almost $58 billion expected. So there you go, guys. Guidance for revenue is a bit soft, and not seeing much of anything else there. But overall, this is completely collapsing. 10% red day, and it looks like, well, we picked the bottom of the wedge, guys. You guys see the wedge here that I drew out? We were talking about what direction it was going to pick, and well, looks like it ended up collapsing under the wedge, and we took out the lows from the beginning of May being about $45, which is not a good sign at all here for this stock. So Alibaba also reported earnings, and they also got destroyed. Are you guys seeing a pattern here between these stocks? They're very different companies, right? But they all reported earnings, and all their stocks are getting destroyed. Alibaba down 9.1% on the day, and it's now at a pretty much fresh low, almost at a fresh low here on the 4-hour chart. We're a stone's throw away from $77.77. So Alibaba reported, and it looks like they ended up doing adjusted EPS of 27 cents, which was up 21% year over year, and sales came in at $30.81 billion, up 9% year over year. And to be honest, guys, these technicals are not looking good at all. We have a descending triangle on the 1-year chart that is clearly looking to play out. And if we do break under, let's say $77, which is the low from a couple of months ago, this could be heading, this could be heading mid 70s, low 70s. In my humble opinion, guys, there could be more downside from that point. So Alibaba is not looking so great technically right now. And some other ones here that I'm looking at that have not reported earnings yet. Dexcom is looking pretty good technically. We're breaking above the moving averages. We have a golden cross here. And with the price action over the past couple of days, we've officially broken above $98, which was resistance from the end of September. We also are now testing $107, which was the high, it looks like, from the middle of September. Yeah, so if that were to break, we could be seeing some more upside here on Dexcom, maybe towards $115, maybe 120 plus is where it could be going. So keep your eyes on this reversal. Let's see here, guys. The next one I'm looking at, MAR, is the ticker Marriott. This one is also starting to reverse. You guys can see this little, I don't want to say a little downtrend. It's actually a pretty sizable downtrend if I'm, now that I'm looking at it. But we can see we were in this downtrend from 210 to about 185. Not too crazy, but about a $35 drop, or what is that? A $25 drop, excuse me, guys, about 13%. Pretty sizable, right? And since that point, we've actually been starting to break back out. Now we're above the moving averages, starting to break out of this channel, and today it actually had a pretty good day, 1.2% green day for Marriott. So keep your eyes on this breakout. Let's see if this starts moving towards 210, which you guys can see was the high from, when was that? The middle of August. And if that were to break, this could be going even higher. So Marriott has a lot of momentum building up right now by the looks of it. Marvell is another one. MRVL is the ticker that I'm looking at. It did have a red day today, guys, 4.4% red day, but it is still breaking out of these moving averages. We have a golden cross. Earnings are coming up, though, so keep that in mind. But it looks like this is just simply a pullback within the overall breakout. So let's see if buyers come in here at about 54, 55 bucks per share, and I'll be looking at it closely to see if it starts making a move back to the high 50s, maybe low 60s again. So Marvell's, pretty interesting at this point. And CRM is another one, guys, who's set to report earnings fairly soon here. I think not next week, but the week after. 30th of November, which is in 2 weeks from today. So not, next Friday, but the Friday after that, we have CRM reporting earnings. And you guys can see this is clearly trading in a, downwards channel. And now we're at the top of the channel here, which is at about 220. So let's see, do we break out of that point, start going 235, 240, or do we get rejected and, start selling off into earnings, which we have 2 weeks till earnings, guys. Who knows? Maybe this thing starts building up some more momentum. Maybe some hype comes in, which it's not really a hype stock, so I wouldn't bank on that. But we'll see how it acts heading into earnings, which, again, 2 Fridays from now is when they're reporting. So what do you guys think? Let me know your thoughts in the comments, and please do your own research on these stocks, guys. I'm not telling you to buy. Oops, I just knocked the mic. I'm not telling you to buy or do anything. All I'm doing is putting them on your radar. Make sure to subscribe as well here on YouTube. It's free. Follow me on X at Stocks Talk Stocks, and don't forget to get your free stocks from Moomoo with just a $100 deposit. You get 5 stocks, each up to $2,000, and you get a free share of SoFi stock as well. And fund your account at least $1,000 on top top of those 6 stocks you just got, you get 10 more stocks, totaling 16 stocks, each up to $2,000. So use that link down below or go to stocksforfest.com/moomoo. And with that being said, guys, cheers. I'll catch you all in the next one.